Today, we're going to talk about some updates happening in the mortgage world that could impact first-time homebuyers. What I'm referring to is the new mortgage rule that is aimed to make home ownership more accessible. But the question is, will it really help first-time homebuyers afford their dream home? In this video, I'm going to go over what this new mortgage rule is, and we're going to discuss some of the benefits and limitations of this new rule to determine if it will actually help first-time buyers become homeowners. Hi there and welcome. For those of you that don't know me, I'm Sonia Ramgobin, a realtor with RE/MAX Real Properties servicing the Durham region and GTA. Starting August 1st, 2024, the Canadian government rolled out a new mortgage rule that allows first-time home buyers to secure a 30-year insured mortgage, but specifically for newly constructed homes. So this is a shift from the typical 25-year amortization period that many buyers are used to. And the idea behind this new rule is to make monthly payments more manageable by spreading them out over a longer period of time. I actually wanted more information on this new mortgage rule, so I decided to do some research and came across a CTV News article that outlined this new mortgage rule in great detail. Two important factors that this article wanted people to keep in mind is the fact that this new mortgage rule only applies to one, first-time home buyers, and two, that these first-time home buyers need to be purchasing a new built home. So let's break down who's considered a first-time buyer. So according to this article, the federal government considers a first-time home buyer to be one, anyone who has never purchased a home, or two, who has not owned their principal place of residence for the last 4 years. So this could mean you were either renting or living with a family member for the last 4 years. Or three, who has recently experienced the breakdown of a marriage or common law partnership. So basically, if you meet any of these three criterias, you're qualified, but you can only purchase a new built home. So what is considered a new built home? A new built home is considered a property that hasn't been previously occupied. So no one has ever lived there before. So now that we know who exactly qualifies for this new mortgage rule, let's go into more details on how exactly this new rule is supposed to help first-time buyers. So number one, it can lower monthly payments. With the extension to a 30-year mortgage, your monthly payments could decrease slightly. So for example, if you're buying a new condo, let's say for $500,000, the difference in monthly payments between a 25-year and 30-year mortgage could be a savings of about $240 a month. So that extra money that you're saving could be used to go to other expenses, for example. Number two, it can increase affordability. So for many, the obstacle to being a homeowner is not just saving up for a down payment, but it's also being able to qualify for a mortgage. By spreading the payments over 30 years, the affordability of homes within your price range increases. This means you might be able to look at homes you previously thought were out of your reach. Number three is that it can encourage more new build development. So what I mean by this is because this new rule only applies to new build homes, the hope is that this new rule will help stimulate housing supply by encouraging developers to build more, knowing that there's a financial incentive for buyers. So now that we've gone over some potential benefits of this new rule, let's talk about some potential limitations that we want to keep in mind. Number one, longer repayment periods. So a 30-year mortgage means you're stretching your debt over a longer period of time, which could lead to more interest paid over the life of your loan. So it would be important to weigh out whether the short-term savings is worth the extra cost in interest being paid over a longer period of time. Number two, I mentioned this several times, is that the offer is limited to new builds only. So not all first-time buyers may want to buy a new built home because of the wait time involved. This process takes years to develop, so it might not be for everyone. Purchasing a new built home requires a lot of planning ahead, so something to definitely consider. Number three is that this offer does not apply to properties worth more than $1 million. So let me explain further. This new rule only applies to insured mortgages. And the two requirements needed for an insured mortgage are: one, the value of the home being purchased must be less than $1 million, and two, that the down payment must be less than 20%. So in my opinion, this can really limit the options for first-time buyers. In today's market, depending on the area that you're looking to purchase in, you may be limited to a condo purchase only because that may be the only new built that fits in that required price cap. So overall, based on this article, many mortgage specialists do not believe that this new rule will help many people. They believe that what will help more is further interest rates reductions. So in my opinion, I would have to agree with some of the feedback from this article. In my opinion, these new rules have so many limitations that do not give first-time buyers much choice, which will probably cause them to not consider this option to begin with. Well, I hope this video gave you some insight on this new mortgage rule, and I'm curious to know what you guys think of these changes. Will they make it easier for you to buy your first home? Let me know in the comments. As always, thank you so much for tuning in, and I will see you in the next video.